Welcome to my live stream. It was a good day on Wall Street where stocks went up in value, especially communication services stocks like Meta, Google, as well as technology stocks that were really rallying off the news that Foxconn, which is a Taiwanese company, they produce microelectronics and the business that supports data center flourished. So they really, really did well. The market was having a very good day for most of the session, seeing the NASDAQ almost reached 2% at one point, but then it calmed back down, but it still had a great day, up 1.24% in one day. So it was a really good Monday for the NASDAQ. The S&P did well, 0.55% gains, and the S&P is highly influenced by these big, massive stocks like Apple, Nvidia, Microsoft. The Dow ended in the red just slightly, not too bad. Small companies represented in the Russell 2000 ended in the red as well, not too bad, just down 0.08%. Some notable names: Coinbase just flourished today, up 6% because Bitcoin has topped $100,000 per coin again. It's up to about $102,000 per coin. So that definitely creates a rally for Coinbase, which makes it their business to give investors the ability to buy Bitcoin as well as other cryptocurrency coins. So Coinbase just had a great day. Meta had a stupendous day, up 4.23%. That is just great. And I'm going to look at Meta in a little bit and show you how it's been doing for the past year, which has been very, very good. Google Alphabet was up 2.5%. And another notable name is Hewlett Packard. The company that provides PCs and printers did quite well, up 2.22%. The big news of the morning that caused the rally was Foxconn, which is a Taiwanese company. They are in the semiconductor space, announced that they did really well and that the data center business was really booming, which caused people to expect that that boom is going to also help NVIDIA and other semiconductor companies. It's also refueling the whole story behind AI. So the AI story has been the story to invest on for the last 2 years, and it looks like it's still going on the third year consecutively. So AI is the big story that investors are putting their capital into, and Foxconn just lit a fuse under this rocket ship as a market. So Foxconn is the company that really created all the excitement today. When I look at sectors, the number one sector ended up being communication services. And communication services has Meta, which was a high flyer. It's a big cap, $1.5 trillion in market cap. That was in there along with Google Alphabet, which is close. I think it's over $2 trillion in market cap. So that had a stupendous day, just a lot of things. Another announcement was that I believe Disney is going to have Fubo be a part of their streaming service, which has caused that stock to really rally. So a lot of good things happen in communication services. Technology really showed up as it's been just killing it for 3 years in a row. Go technology. Man, people can get wealthy quickly investing in the right stocks within technology. It really delivered again today, up 1.66%. Consumer discretionary is also there. The notable name I'd put out there is Amazon. That's a consumer discretionary company. That's a $2 trillion market cap company. It had a good day. Its stock price went up. So those were the sectors that really moved. The sectors that fell behind: real estate. Real estate's in the doldrums because higher interest rates are just going to make it harder to make money in real estate. And it hasn't been historically a very good place to invest. If you're a growth-oriented investor that wants to see one's capital double in value often, which is my goal of doubling my money every 5 years. So staying out of real estate stocks or being careful with them is a good idea for me. It was down today by 1.34%. That's a bad day when everything else is working, it seems. Consumer staples are for times when all other stocks are falling. Consumer staples tend to work. And that's really the only time they work. Utilities were down, and all the rest were kind of in between. Not down much, not up much. So those were the sectors. And when we look at the big cap companies, Apple was up a little bit, 0.67. NVIDIA had a great day. Thank you to Foxconn providing the good storyline, helping semiconductor companies. Microsoft had a good day, up 1%. And Google Alphabet had a very good day, up 2.65%. Amazon up 1.5%. Meta had a great day. Tesla just held even. And Broadcom was up nicely at 1.66%. Berkshire went down. And Taiwan Semiconductor, out of the big massive caps, had the best day overall, up 5.46%, which is a very good gain. So the big caps really, really worked. So the market's up today. What's it going to do tomorrow? I'm not quite sure. I think we're in an expensive market. So if we have sell-offs, I wouldn't be surprised. But the rallies just have been quick to happen. And boy, they get exciting very quickly. In the first couple of hours of trading, we really saw stocks flying up. And it's good to see that the market as a whole, looking at the NASDAQ, held those gains. If it had been another head fake where it went up and then it crashed down, that'd be more concerning because that type of volatility really shows that there's a lot of fear in the market. The investors are quick to get out of stocks that they're selling out of positions. In the case here, it really held the gains, so it was positive news. So those are the big stocks that were out there, the sectors, how the market performed. Now, I'm going to go through a list of stocks that have been requested by members of the community. And just to tell you a little bit about the community, it's community investors that come together. It costs a little bit of money to be a member, $10 a month, $25 a month, or $100 a month, depending on the perk level that you'd like. But if you are a member, you get to communicate with me and list out stocks that you'd like to see analyzed, and I will put them on the list. For a live stream analysis, or on weekends we get together and go over stocks, and we have a conference call so we can all be speaking on the call itself. On live streams, of course, I'm the speaker and you guys can interact with me via chat. But if you'd like to put up some stocks for analysis, consider being a paid member. Then you can communicate with me and list your stock that you'd like to look at. So let's get into the stocks that have been listed out by members. First one is Pepsi. This is a stock that is widely held, I think in large part because certain stocks are easy to understand for investors. Pepsi, you can go buy a Pepsi, you can go buy a Coke. This has been around for a long time. This business is over 100 years old, if I'm not mistaken. Yeah, well over 100 years old. So Pepsi is a known commodity. They're primarily a beverage company, but they also do snacks. At one time, they owned restaurants. They owned Taco Bell, KFC, and Pizza Hut. And I believe they divested that, and now that's a separate entity. It is a large cap at $203 billion. And revenue is $91.9 billion. So this is a big company. Earnings per share the PE looks somewhat reasonable, but I'm going to get into the fundamentals a little deeper and then make a judgment call on that. This is a value stock, in my opinion. This is a food and beverage company. Dividends are 3.7%. And analysts think it's a little discounted. Over the past year, It's down 13.4%. So it's a down stock. Is it going to come back up? Over the 5-year, in my book, it's not a great stock because it didn't double in value. Every 5 years, I want to see stocks double in value. That is the goal. That way I can see my capital double in value. That's a very good rate of return. This one doesn't even come close, up 7.8%. With that dividend, maybe you're doing, 5% a year, which frankly barely beats the treasury yields. So that's not a very good yield overall. All right, let me answer a quick question. DDA, you can become a paid member. If you look at the details of the stream, there's a link, and then that's where you can become a paid member. Thanks for asking. Thanks for considering it. All right, so looking at Pepsi, let's look at their revenue growth. Revenue growth really tells me, is this business doing well? Meaning, are more customers coming and becoming customers? Are existing customers buying more of their product? And therefore, a healthy business, both should be happening. The revenues are growing. They're able to increase their prices because customers like the product. And they can maybe grow the types of products and the number of products that are being sold. In the case of Pepsi, it's quite it's a low growth situation. For a couple of years around COVID, I think people were at home snacking, right? We were stuck at home. Maybe we bought an extra bag of chips and maybe some extra beverages to put in the fridge. And they had growth in 2021, 2022. But in the trailing 12 months, just very slow growth. When I drill in and look at the quarterly, the last quarter, it was actually down by 0.5%. This is a big company. So for them to grow is difficult because it's a big number they have to grow on. Previous quarter was up a little bit. And you can see that each quarter, it's up or down a little bit in the last 4 quarters. So I'm not expecting a whole lot of growth out of Pepsi. I don't see some big force or factor being a big catalyst, a big tailwind for Pepsi. So it's not a grower. In my book, it's a value stock. It's a little bit of one of those safety stocks that, hey, people are going to drink their Pepsi. It's a affordable luxury, affordable treat that people can have. Bag of Doritos, a bag of Cheetos. Those types of things are easy for most people to afford. May not be the best for your health, but you can afford it. It looks like Tomas has joined. Thanks so much for joining. Buenas tardes. I appreciate you joining, Tomas. All right, so moving on Pepsi. So I'm not excited about the growth. It's a value stock. Let's take a look at their net margins and free cash flow. So the margin on this business is these guys produce a beverage, and it's mostly water and aluminum can or a plastic bottle, and the ingredients don't cost a whole lot to mix and bottle. So their margins are fairly good, almost 55%. Their free cash flow is good, $6.2 billion. It has come down a bit. It was almost at $8 billion. It's good to see that they've grown it over time. Now, this is a stable, well-known company. So I give them a little bit extra premium since they're well-known. Very known company, very well run, by the way. But they're in a business that just isn't really exciting to me. It's just beverages. It's not like they're changing the world. They're finding a cure to some illness that's really, really bad. It's a little bit boring in my book. So $6.2 billion. They're not growing, at least for the trailing 12 months. They have pretty good margins. I took a look at their debt before the stream started, and their debt's okay. They have a little bit of debt. I think it's manageable, but they do have debt. $45 billion of debt. They have cash on the books of $8 billion. So they have net debt, in my book, of $37 billion. Now, their EBITDA is $16.9 billion. So they could pay off their debt in less than 3 years. So their balance sheet's okay. It's not a hazardous balance sheet that has too much debt and they can get themselves into a lot of trouble. So I'm good with Pepsi's balance sheet. When we look at other stocks that are just booming, especially around technology or biotech, you oftentimes find that those companies have more cash than they do debt. That's a really good sign. That means that company's producing lots of cash, so much they don't need any debt. They just load up their balance sheet and they become super valuable. You look at those top 10 stocks that I showed early, like Meta, they have lots of cash. Google Alphabet, lots of cash. Microsoft, ditto. And that cash becomes the ability to really go into other businesses, expand businesses that are making lots of money. So cash is really good. Pepsi's a really old business, more than 100 years old, and they carry some debt. Now, the company's producing $67 billion of free cash flow. It's not growing. So at best, I would value Pepsi at around $100 billion because I take about $6 billion, multiply it times 15, I get to 90. And maybe I pay 90 to 120 billion for this company. And that's about it. It's not a name that I'm overly excited about because I just don't think the company's going to double in value every 5 years. I'd rather have a stock that gives me a chance of it being really special and really grow nicely. If I'm going to go into a food company, I'd prefer to go into a food company that's delivered way better returns. For example, Kroger. Kroger, over the past 5 years, is up 111%, and it pays a nice dividend. This is a retailer of groceries, similar but different, but it's in the food category. And this is a much better proposition for me. I'm an investor in Kroger. I'd rather be in Kroger than in Pepsi for obvious reasons. It's going up, and you'll see that Kroger has better revenue, better free cash flow growth. Just all those fundamentals mean something. Also, Kroger is a very well-known company like Pepsi. When I look at Kroger, who owns Kroger, some really important super investors like Warren Buffett own it. Where Pepsi, I think, is more of a retail stock. A lot of investors like this dividend. And I'm going to caution you on dividends. I have nothing against dividends. And I think some investors really focus on having income from dividends. Not a bad thing, but I would just say companies know that they can prop up their stock price by managing that dividend. You've heard of the term, these dividend aristocrats. Well, to me, that's kind of a marketing ploy. It just shows that these companies continue to, make their dividend look attractive, so investors will come in and buy their stock. Well, that's fine, but dividends don't represent true value in a company. True value is revenue growth, profitability, free cash flow generation, the ability to load up on cash on the balance sheet and have no debt. Those are true fundamentals that make a company very, very valuable. So I would just say that I don't use dividends in my valuations, with one exception being real estate investment trusts, because there's no other way. But every other industry, I don't take dividends into account. I don't penalize a company for having a dividend unless they can't afford it. Then it would be a problem if they're providing dividends that they cannot afford. But in general, I think the reason Pepsi becomes a sought after stock is that dividend looks pretty attractive at 3.7, and it causes retail investors to buy into the company and create the market cap that they've created. But over the long haul, as mentioned, it just does not create the type of return that a stock investor should be satisfied with. Stock investing, we should get 10% returns, 15% returns. If you're into growth stocks, some years you should get 20, 25% yields in a particular year. You're going to see volatility. Not every year is going to be that great. But to have a stock that's a well-known commodity producing 7.84% return on appreciation for 5 years, to me is not a passing situation. It's just something that I would avoid. So this goes out to the member that wanted to look at Pepsi. As always, this is just my opinion. I don't recommend you buy, hold, or sell any stock I cover, but I commit to just giving you my comments as I see them and try to support my comments with fundamental analysis. All right. Thanks so much, everybody, for joining. We got 14 people on the stream. Thank you so much. Carlos, thanks for coming in. You're a longtime FUBU holder, and I just want to know, where are you throwing your party to celebrate your 200 and some odd % gain today? So I think it's great news. FUBU is a small cap stock. We'll go over it real quick because there's something that I've been saying for a couple months. See this market cap, and this is, I think, after it ran up 249%. Man, if we were in a restaurant, I think we'd all say Carlos is buying because he's got a lot of money today. 249% one day. Woo-hoo, man. Congratulations. And this was caused because there's an acquisition of FUBU appearing because Disney, Mickey Mouse, is coming into the picture and saying, hey, I would like to own FUBU. And I think some strategic reasons are that FUBU televises a lot of live events, a lot of what we call in the US soccer, internationally call football. And I think everybody knows international football is the most popular sport in the world. Billions of people love it. The World Cup, I love it. I watch MLS and I like going to MLS matches. I think it's really entertaining. And FUBU brings that to the table. So Hulu, and Disney owns most of Hulu. They want to combine that and make it a more successful streaming service so they can compete against Netflix as well as others. So that acquisition happened. It really created a good thing for stockholders. Now, I would say that you had to have nerves of steel. Look at that. So I don't know, Carlos, how long you've had the stock. I'd love to hear when you bought the stock originally, if you can put that in the chat. Because if you're a stockholder, let's say you bought, you go, oh man, I love FUBU. They're an excellent company. I think they're awesome. And you buy it 34 a share. Well, the stock really plummeted. It was deemed to be a risk of going bankrupt for some time. Obviously now Disney has deep pockets. They're going to come in and take over that business and make it really work. So FUBU's having a great day. Now, something I've been saying for the last couple months that I expect going forward with the new president that isn't, I think the administration that's coming in is not going to block mergers and acquisitions as harshly as the administration that's going out. And the administration that's going out, you know, I just didn't like what they were doing. They get in the way of, I think these businesses, like, this is a good thing. If FUBU would have gone bankrupt, nobody wins. The viewers of the channel, they don't get to see FUBU anymore. The employees lose their jobs. You know, a lot of bad things happen. So this acquisition is really good. I think more acquisitions are going to continue to happen because you have an administration in President Trump, as well as the Senate and the House being Republican, that are not going to stand in the way of mergers and acquisitions. That's good for small caps. So if you're seeing small caps, you can't, you know, knowing which small cap is going to be acquired, I mean, it's really hard to tell. But if you own a good number of small caps, days like this may be a reality for you. Looks like one of our viewers was in FUBU stock. Awesome. So hopefully you had a lot of money in it and it's up 250% one day. And in the after hours, it's up 22%. So I am in a good number of small caps. It looks like Carlos started dollar cost averaging under $10 a share. starting at $2 a share, starting in 2022. Congratulations, sir. Feel good about it because you should. And investing, man, could be really fun. I can only imagine. I've had a couple stocks acquired. Activision was a stock that got acquired. I've probably had 3 or 4 stocks that got acquired. But I'd never had a stock acquired and go up 250%. I've had, overnight it goes up 30, 35%, up 60. I think Activision was up 65% just in one day, which was fun. And I had like 50 grand in it. So it was like, awesome. That's great. But 250%. Congratulations, Carlos. And there you go. Small caps. That's where there's going to be some money to be made in 2025, 2026. I think we're going to see more acquisitions. This one's strategic for Disney, but you can find them in other places like small tech, small biotech, healthcare, small insurance, potentially, small financial services. I think they're out there. All right. So congratulations, Carlos. That is awesome. All right. So Casey, thanks for joining. Hey, thanks for the positive comment, Casey. It means a lot. Thank you. Tomas, thanks for being a member and thanks for joining. Healing with Nature. Thanks for joining. I've covered SoFi. I know I covered it last week. Tomas, since we are talking beverages, you want to take a look at ABEV. They are a Brazilian beer company. So ABEV. All right, let's take a look. Wow, this is a small cap. Yep. So Ambev SA, through its subs, engages in the production, distribution, and sale of beer, draft beer, carbonated soft drinks, malt. Okay. So these guys are, wow, they've been around for a long time, over 100 years, like Pepsi, like Coca-Cola, a lot of employees, and they are out of Brazil. When we look at this company, similar to Pepsi, no growth. And we're seeing this in the real, the Brazilian real. So, but we'll look at percentages just to see how the company is doing. Now, when we look at the revenue, no growth. Although the most recent quarter, they had positive growth. They had a string of 3 negative quarters. Last year, 2023, they had negative quarter, negative quarter, negative quarter. It looks like they turned things around. Now they're beginning to grow. In fact, this quarter matches the fourth quarter of 2022, which was a good quarter for them. So things seem to be turning around. That's a positive sign. Let's take a look at other factors. Let's look at their gross margin, and then I'm going to look at their free cash flow, but not on this screen, a different screen. Gross margins, similar to Pepsi, 51% gross margins. I think those are good gross margins. This is a beverage company, so it's not like 5%, which would be like a retailer. This is a good beverage company, 51%. Now, let me take a look at what's nice about this website stock analysis is they convert the statistics they put on here into US dollars. So it makes it easier for me to see what their free cash flow and so forth look like. So free cash flow for the trailing 12 months is $3.37 billion. Okay. They are beginning to grow. They're beverage, stable industry. Now cash, they have lots of cash, 3.85 billion, but only a little bit of debt. Very good. Okay. All right. So most definitely they have enough cash on the balance sheet to pay off debt. So this company would be worth, I would say, about 50 billion, give or take 5 billion. And I'm taking 3.4 billion. If you multiply it times 10, you get to 340. If you multiply it times 15, you get to about 51 billion. So let's say it's worth about 51 billion based on the industry, its slow growth rate, and they're a $29 billion market cap company. So this company is discounted based on free cash flows. Free cash flows, if you discount those future free cash flows, it'll probably be about 50 billion in value, but I would probably discount those free cash flows by a higher discount rate since it's out of the US and probably arrive at 40 billion to 50 billion dollars. This company over the past year has really come down in stock price, coming down 35.6%. And it really hasn't done anything over the last 5 years. So both Pepsi and Ambev, I mean, this is a tough situation. Now you're buying into a company that is discounted. It pays a dividend. That's good. But, am I excited about the industry? No. Do I think the industry is going to be worth a lot more in the future? No, I don't think so. I'd rather pick industries that are more. They're building something that's going to be really worth a lot. A company, for example, Uber has been working. Mercado Libre had a bad day today, but they've had a couple of really good days. Mercado Libre is building something that is really valuable. They're servicing the Latin American economy with e-commerce. That's going to be worth so much. Where these guys have been around for more than 100 years, and I just don't think they're going to be worth much more. Could I see this thing working and maybe giving a 20-40% return over the next 5 years? Definitely. And then that dividend is a little enticing at 6.21%. For a young investor, I would say this is not a good option. Go find the next, NVIDIA. Go find the next Apple. Go find the next Microsoft. Because if you find a couple of those, it's just going to be great. You'll put $10,000 and wake up in 10, 20 years with $100,000, $200,000, $300,000. That's what I would want for an investor. That's what I want for me. And companies like these are just a little too slow growing, unattractive, undesirable. They don't have any barrier of entry. It's a beverage, right? So you can buy Coke, Pepsi, or other brands. If it's a beer, geez, there's probably 1,000 different types of beers. So that's my feeling on this company. It is sold off, but it just doesn't fit into my investing criteria. If you look at what I own one supermarket grocery retailer, Kroger. But I own like 6 technology companies. I own 3-4 different communication services companies. I own Amazon, Mercado Libre, and Alibaba, because I think those companies are really going to change their industries. They're very disruptive. They have barriers of entry. They continue to create more value for the customer, for themselves, for their stockholders. That's the investment I want. So thanks for asking about this, Tomas, and I appreciate you. Omar, good to see you. Everything seems overpriced. I agree with you that the market's very expensive. Got to be careful on what you buy. Make sure you don't overpay. I wouldn't be surprised if we have a strong sell-off. What do I think about Palantir? I think they're really overpriced. So, Michael Anthony, good to see you. You have been on live streams quite a bit. So, thanks for joining. So, Job closes Friday. All right, good. Fubu trade is over. Lyft is going higher. Great. So is Uber, the announcement. And I'm going to go over Uber, I believe, later. Am I going over Uber? Yeah, I can go over Uber later, and I'll comment on Lyft. All right, so yeah, good job, Carlos. Take a victory lap. That is awesome. So all beer companies have to put on their labels that they could give you cancer. Ha. Huh. I didn't know that. Okay. All right. So Alpha Realm Sports, thanks for joining. All right, cool. All right, keep the comments coming, guys. Let me keep rolling on the list. I was given a pretty long list. Let me keep rolling. Hopefully I can get through this stuff. All right, let's get into Uber. Somebody was just talking about Lyft. It's on the list. So while it's fresh in my mind. So Uber and Lyft went up today. There was a story that I think caused, well, two things happened, right? You had a booming market where stocks are just flying up. Then you had a story in Manhattan, New York, where during peak hours, if you drive a car into Manhattan, you're going to have to pay a $9 toll. And I think that created more demand for Uber because I think if you paid it once, they're not going to charge you the toll over and over and over again. So if you drive an Uber car into Manhattan, you'll be able to operate and give people rides for that one day. So they kind of get to, I guess, apply or pay that fee once, maybe give 10 rides and make some money. So that really created a good tailwind for Lyft as well as Uber. Uber, I've noticed over the last 5 days, is up 9%. That's not bad. I'm an Uber stockholder, so I like Uber. I think it's really discounted. And 9% is nice. The stock has been really sold off for the past year. And now it's up 15%. But you can see this sell off, man. The stock price really reached heights of $86 per share. But then the story of how Robotaxi may disrupt Uber, that story has really caused, I guess, some fear long term in Uber. Now, I'm an Uber stockholder, and I just think that story is nowhere near being reality. If you think about where Robotaxi's at, I'm a Google Alphabet stockholder, so Waymo is a part of Google Alphabet. So I don't have anything against Robotaxi. I'm just being realistic. The number of units of Robotaxi that are out there are like in the, I'm going to say tens of thousands. And the number of Uber rides, people hail rides on Uber more than 1 million times per hour. Their scale is massive. It's a huge network. They're international. Uber has a very valuable business. They are the leader. They've left Lyft in their rear view mirror. Lyft has not been able to grow as quickly as Uber. They're nowhere near the scale size, nowhere near the profitability, nowhere near the free cash flow. And the stock prices have seen two different appreciation curves. Let's take a look at them. I like using Google Finance because I can compare one stock against another. So when we compare these stocks and we go to the 1 year, the two stocks, Uber barely wins that category. But this is where Uber has really separated itself from Lyft. Lyft is really either poor execution, poor growth. They've just kind of been left behind. And in these industries, the leader, it's not winner takes all, but I would say winner takes most of the market and most of the profits. You look at Meta, Meta is the dominant player there, and nobody else really makes a whole lot of money in social apps. You look at Google Alphabet with Google Search. Google Search is worth so much, but everything else is not. Everybody else who competes in search doesn't make very much money. And I can go on and on. Industries of that type. NVIDIA is like the number one semiconductor company for GPUs. Nobody else is even close, even though others do provide GPUs. So Lyft, I'm not a Lyft stockholder. I wouldn't invest in it because I think they become less and less relevant over time. the real relevant name is Uber, in my opinion. So I'm going to continue to buy their shares and stay with Uber. They've done well over, last couple of days, but I just think the stock is nicely discounted. When I look at Uber and I look at their cash flows and I look at how the company continues to grow their top line revenue. So I think the stock's discounted by 84%. The cash flows, when I discount those cash flows that I expect out of the company after I forecast them, it's 94% discounted. If I look at the earnings per share, discounted by 64%. I take more weight of the free cash flow method. So Uber is one of my, substantial investments. I've got a fair amount. And I am continuing to buy shares because I think the market has it wrong. And I think this pullback is an opportunity. Maybe the market's realizing, yeah, you know what? Robotaxi is not going to be a real business thing for 5 years, maybe 10. It's going to take a long time for those robotaxis to get anywhere. So thanks for asking about Lyft and Uber. I wanted to cover them because it's one of those stocks that had a very good day and had a couple really good days. Now, a stock, somebody asked about Pepsi, and then we talked about another beverage company. Let me show a nice old school company that had a good day. That's Citigroup, up 2.45%, pays a 3% dividend, and over the 1 year, up 34%. It's had a really mixed 5-year. Now, I started buying into this, stock around this era, so I'm doing quite well with the stock going up and then paying me the dividend. So this stock did well today. Financials did well. So I think somebody earlier in the chat said it's an expensive market. I agree with you. So you got to be wise about where to put capital to work. Citi is, I think, a good stock. I continue to think it's well priced, meaning I think it could go up higher. Not a whole lot higher, but it could go up higher and continue this trend of the stock price continuing to climb up. The new administration should be good for banking. I think they're going to reduce regulation and reduce the deposits that banks have to hold. If they hold the deposits, they can't lend them out and make money on those loans. If they reduce the reserves of that bank, the reserve level that they have to keep, they get to make more money. And I think that's going to happen. The forward PE looks phenomenal at 10. So I think Citigroup looks good. And I'll continue to invest in Citigroup. So that's a stock that's dividend payer, very well known, that had a great day. The other stock, it had a boom of a day, and it's been having a very good last couple months, last couple of years, is Coinbase. It was up 6.32%. The reason for it is crypto, Bitcoin is up above $100,000 per coin. That's I think a very important milestone is to get above $100,000. It's already been above. It was operating in the 90s. Now it's back up over 100 per coin. Well, Coinbase, with all that excitement, interest in Bitcoin, is really rallied up. Over the past year, stock's up 87%. And it's really had a couple of months that have just been awesome. Coinbase is a stock that I own, and it's had a very good couple months. And I think if Bitcoin continues to work, continues to go up, this stock's just going to continue to go up because there's more interest, more inflows into Bitcoin. Coinbase makes money when people come in and buy Bitcoin on Coinbase, as well as other products that they offer. Institutions that are offering Bitcoin in ETFs and so forth are using Coinbase to help them gather the Bitcoins they need and then hold them, because Coinbase has the expertise around that. So there's a new revenue stream that they now have, which is institutional investors are using Coinbase, which is great. This company creates free cash flow, even though it's a young company. The revenue is $5 billion, market cap $72 billion. Not the biggest market cap you ever seen, but it's really done well over the last 2 years. And they had a phenomenal day today. So go Coinbase. Great to see them do well. I still think, let me look at my valuation of Coinbase. It had been sold off a little bit, and I started buying into it because I thought that the buying was good. But now we're back to, I think, a fair price. For a while before it jumped up, it was discounted a bit. So I bought some more shares over the last 3-4 months. I'm glad I did so because those shares have gone up in value. This is a good stock for me. It's a high risk stock. Coinbase is about the future. The future is a little unknown because, how big, how far is crypto going to go? Well, it's made it to this point. It's been quite a revolutionary path that it's taken, but it's done really well. So Coinbase as a brokerage for that new space, that new asset class, is doing great. Go Coinbase. So Coinbase had a phenomenal day. Good to see that happened. The next company that had a very good day, that's the stock that I've been covering more recently, and it came out of a investor call we had on a weekend, was Lam Research. It had a nice day. The reason for it is Lam Research supplies the semiconductor industry. And when Foxconn, which is a semiconductor company, announced that they had a very good quarter, it created the expectation that semiconductor companies are just going to be doing great. So Lam Research got a boost. It went up 3.82%. I think the last 5 days it's done well. It's really jumped up nicely, 8%. And this is a stock that we talked about on our investor call probably about 2 weeks ago. And I realized, hey, this is a good investment. And I started buying into it. I didn't buy, a whole lot, but I dollar cost average in my investment. But it's good to see that this stock is on its way. I think it's a stock that is, I think, misunderstood. And I'll show you why. It was sold off. Now it's beginning to, work. And when I look at Lam Research, the fundamentals look good. I just don't understand why the market is selling off this company. They are growing the revenues. Free cash flows look good. Free cash flows are actually really good. And their earnings per share is really good. So overall, I still think they're discounted by 45%. So I'm going to continue to dollar cost average in. It's hard to buy shares when the stock is really moving up. So I didn't buy any shares today, but I've been buying pretty much a couple of times a week, and we'll probably build up my position at $10,000, $25,000 and just ride this Lam Research recovery because I think it is sold off and it should do well for 2025. If semiconductor does well, Lam Research is going to do really well. So this is a good one. I think when we analyzed this one, we compared it against one of their main competitors. And I thought this one looked better, and I'm glad I bought it. So Lam Research had a phenomenal day. Awesome. So looks good. The other stock that is in financial services, similar to Coinbase, was Robinhood. And just Robinhood has just consistently been going up. Just a really, really good stock. So it took me a while to make that 250%. Looks like I think it was Carlos. Carlos made it in one day. Took me a year. I've been a Robinhood investor for maybe 2 years. And the stock's really done well. This is a disruptor stock. It's disrupting the brokerage business because they do it the way they want to run their business, which is the new way that newer investors, younger investors want to trade stocks. And they've been doing a great job generating free cash flows, growing their revenues, creating new products that they really reimagine the financial services space. They're not anchored to how we've been doing financial services in the past. They really reimagine it and really put together a offering for their customers that works. And they have been making it happen. It's still rather reasonable market cap. It's 37 billion, revenue 240. Now this would be a massive acquisition, but I could totally see one of the bigger financial services companies trying to take this one on and buying it. They might be a little too powerful now to acquire, but I could totally see that happening. It would be a big acquisition, 37 billion. But who knows? Maybe a JP Morgan or that type of company would come in and offer 40, 50% more. And that I totally see happening. The company has gone up in price so quickly that analysts think it's overpriced. I continue to think that Robinhood is it's still discounted because these cash flows they produce are good. That's my estimate. But if you forecast those cash flows at their growth rate, it's just a very valuable business. So I still think they're discounted. And if they continue to grow, this company is just going to continue to be more valuable. So go Robinhood. When are they going to announce? February 11th, in about a month. So that'll be an interesting earnings to watch. And it's been a good stock to follow. All right. So let me catch up on comments here. Looks like Grab is out there. I'm not too sure what Grab is. Oh, they're in the ride hailing. I think we did look at that. So yep. So they have super apps in Asia. The market cap is pretty impressive at 19.6 billion. They're losing money. I think I looked at them, and the one thing I would say is you're paying a very high PE for a company in Asia. And I know that Chinese stocks are really discounted. I own Alibaba. I've followed Chinese stocks, and it's quite amazing that Chinese stocks don't do any better than they have because their fundamentals look really good. My conclusion on this stock is I'd rather own Uber, and I'm good with Uber and like companies because Uber is also an international play. Uber is, found in Asia, found in Europe, Latin America, and so forth. So I'm good with Uber, and good luck to anybody who owns Grab. All right, so Michael Anthony, you think Hood is going to fall tomorrow? Well, I'm going to watch it, and we'll see. We'll see. But I think Hood's going to go up in value over the next year and 5 years. And I will hold it, continue to buy some of the shares at reasonable prices. All right, good stuff. So let me continue on my list and keep the comments coming, everybody. While I've got a little break, please consider being a member of our community. I've got a $10 program, $25, $99.99. Different perk levels. Would really appreciate it. And you get to nominate stocks, ahead of the live streams that I put into the list, as well as you get to join the conference calls on weekends, which would be awesome to have you. So please consider it. It'd be great for you to join, and I appreciate it. All right, so moving on. Meta. Man, Meta had a monster move. This is a big cap company, right? $1.59 trillion. For it to move 4%, that's like $6 billion of market cap added on to the company. So that's a big move. And the revenue is great. I mean, this is a great company, great business. And the one story was out there was they put Dana White in the board of directors, which is Dana White's the Ultimate Fighting CEO, and I think he may have been one of the founders of that fighting league, which is a really interesting sport. Um, and I think the ties that Dana White has to President Trump might be helpful to 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 Meta. I would say that Zuckerberg has had a relationship and a friendship with Dana White for some time. So I've known of that friendship just because I cover Meta. It's my biggest stock holding. So that was the one story that came out. And there was a lot of reasons for the market to go up, right? There's a lot of stocks are moving. So it makes it sense that Meta also moved up with the market, but it just moved up at a higher rate. The only company that did better was TSM, and they directly were affected by that Foxconn news. So Meta had a terrific day. It's had a terrific, 12 months. And if you consider this giant pullback, I mean, if you bought here, you're up 600%. But overall, it's just been a winner. And I'm glad that I bought into Meta, I've been a long-term holder, and will continue to hold their stock. I think it's a terrific company, and their social apps are really, really used around the world. So go Meta. And the one thing about Meta, their fundamentals look great, great growth, great free cash flow. I still think they're discounted. I'm not buying any more shares because they just own a lot of it. But the piece to Meta that is, I don't think, added to the valuation is their AI application is real. It gives very good answers. It's free. They have the ability to offer up Meta AI to over 3 billion people, active monthly users of Meta. They can offer up this app. So I think the growth in their AI app is going to be incredible. And when they announce, which will be on January 30th, I think this is one of the areas that I'm going to focus in on is, have you gotten, a lot of users of Meta AI? I know I'm a user. I'm sure other people have been using the app, but it'd be interesting to see how many people are using Meta.ai. If it becomes a huge number, this stock can continue to go up because the market's going to see that, hey, these guys have great businesses in Facebook, Instagram, WhatsApp, and now they have this new business in Meta.ai. And what they're able to do with this business is similar to their Facebook, Instagram business is, put in advertising in there and make it an advertising, monetized model. So I'm really excited about the Meta AI business. I think it's a good app, and I think it's potentially going to make the value of Meta that much more because it's something new. It's organic. They own the whole thing. They built the large language model. Everything you're seeing with AI, they built. And I think some of the infrastructure that they built for the metaverse has been redirected straight at AI. So it was kind of like they failed in the metaverse. They had the infrastructure. They're able to realign those assets straight into the AI business. And if they have a lot of users of AI, I think the Meta stock is just going to fly up because investors are going to be super excited about Meta AI competing against ChatGPT, against Microsoft with its Copilot, against Google and their Gemini app. Meta is right there with them. And Meta has a huge advantage of having so many active monthly users. When it comes to an AI app that would be introduced to the public, to the retail customer, Meta would have huge advantages. So I'm excited about this part of their business. We'll see where it goes. And that is Meta. So a lot of stocks went up. Qualcomm went up. It had a really good day because it's semiconductor. Some stocks that didn't go up that fell today, one of them was Allstate. Allstate went down 2.89%. This is a financial services company, insurance. It's worked for the past year, but it's really sold off. And I'm currently buying into Chubb, which is similar situation where it's being sold off. But I think the insurance business has really worked for the last year, pays a dividend as well if you're a dividend investor, and their revenues have really grown nicely. So I like the space, especially since technology and other related industries are so expensive. Paying a PE, a forward PE of 12 looks pretty damn affordable, considering that these guys are growing. So you have revenue growth and you have a PE that's very reasonable. You have very good profits. So I am good with Allstate, and I'm buying shares of Chubb. I don't want to buy Allstate shares right now because I want to concentrate my buy into Chubb, which is another insurance company. So insurance was an interesting industry. It sold off today, while other industries are really in rally mode. And I think that's where I buy. I like buying when the market doesn't like a company or an industry, forgets about it for a quarter or two, gives me a good price. Great. I'll buy it, wait a couple quarters, see it rally. So I'm expecting that out of Chubb and Allstate. Chubb is where I'm putting my capital into. I own a good amount of Allstate already, and I'm just beginning to grow a position for Chubb. Chubb is an insurance company, and it's also the insurance company that one of the insurance companies that Warren Buffett has been an investor in. I did my fundamental analysis, and I think it's really, really nicely discounted. So I want to buy into the company. When I look at their fundamentals, it is a very good discount that I see on them. I mean, huge discount. If you look at like the cash flows they produce are pretty amazing. No wonder Warren Buffett's an investor. They just produce great free cash flow. And that cash flow is worth a lot of money. And with moderate, growth, it still values really high because those are just really high free cash flows. These are like comparable to, tech, comparable to communication services, just really nice. And they don't have to put a lot of capital back into the business. So really nicely discounted if we look at cash flows, as well as earnings per share, really nicely discounted. So I would gladly continue to buy into Chubb and build a nice position, maybe $50,000 into Chubb. And I can have two nice positions in two good insurance companies. So when the market's focused on other industries and it gives me a discount, I will gladly take it. One stock that sold off that was kind of a surprise is Catalyst Pharma, because it's been doing really well, but it sold off, and healthcare did sell off today. So it wasn't just Catalyst, but it sold by like 5%. This is a small cap. This is a good stock. I like it. I made money up nicely. It's up 38% for the 12-month. For the 5-year, it's up 441%. It's a good grower, 32%. And now they've gotten bigger, so the growth number gets a little harder. Really profitable, very good cash flow generating. And healthcare did sell off, and these guys sold off with it, but these guys were probably the ones that sold off the hardest. So that caught my attention. I bought more shares today. I'll gladly buy at a 5% discount. I didn't get a 5% discount. I bought maybe at a 3.5% discount. So it looks like Michael Anthony's bringing in the Cramer comment. All of the insurance companies selling off, and I guess Cramer's statement on insurance companies last week is hurting them today. Yeah, I don't know that Cramer moves markets, but I think Cramer's fun to listen to. I think that insurance is doing its thing, but the market does what the market does. We saw what they're doing with what it's doing to Uber, right? It's really sold off. But let's take a look at Allstate, and you can see that volatility is my friend. With volatility, a stock sells off. Like in this case here, it sells off. Then I get to buy it and see the stock rise 83%. So I like volatility. That's where if I do my homework, I watch a stock, I like a company, I get to make money. And if we have a sell-off in insurance, I will gladly take the discount. Assuming that Allstate and Chubb continue to be very good businesses, I will gladly buy shares. Thank you very much, because it just happens over and over again. The market will discount stocks and give me a really nice discount. Good example is like our friends at Robinhood, since it's going to drop tomorrow. Let's take a look at how hard it sold off. The market said this business is so undesirable that we're going to sell it off by 82+%. It's just a terrible business. But, I thought otherwise. I'm like, no, it's really a good business. It's, catering to the new generation of investors. It's making cash. It's growing really well. It's got a new spin on financial services. So yeah, the same stock that, went down 82, 85%, you can turn around and buy it at the right time. You make 400%. So volatility is my friend. Volatility is an opportunity. If we just have stocks that are very consistent, like a bond, you can't make a whole lot of money. That means you've probably heard the term, our market's efficient. That means that stocks are very predictable. Everybody knows what it's going to be and how much it's valued. That's being efficient. Markets are not efficient. You can see that the market misunderstood this stock, sold it off just like it was just worthless, like it's going to go bankrupt. And that was inefficient. That was wrong. And for an investor like me, hey, I'll gladly buy it and make money. Thank you. So, hey, you want to do that to Chubb? Thank you. I'd like to buy some Chubb shares and make money on them. I'm all right with that. So Chubb's been very consistent. Look at that upward chart. That's nice. But as we see it sold off here, hey, thanks for the discount, stock market. I'll buy it. And hopefully it keeps riding this upward curve. It's just going to revert back to where it's supposed to go up here. I'll make a nice 20, 30% return and thank the market for the volatility. So volatility is good. I don't care what Cramer says. And I like Cramer. I think he's fun to watch. He's got great energy. He's really fun to listen to. But I rarely ever take any of his advice. His is more like, he's a momentum investor. Like something that has momentum, he jumps on it. And I'm not a momentum investor. I recognize that some stocks are really rallying because of momentum. I'm more of a fundamental analysis investor, looking at the fundamentals, making sure that fundamentals look good for a company. All right. So the last company I'm going to cover is Mercado Libre. That is a stock that sold off today after having a couple good days. Had a couple good days, and then it sold off today. Sold off by almost 2%. I bought more shares, and I'm building this position quickly because these shares are expensive, $1,800. And Mercado Libre, I wanted to buy it earlier last year, but the stock just took off on me, and I was like, whoa, it's hard to buy stocks when I feel like they're expensive. So I waited for it to come back down. We talked about this stock on the investor conference call. I thought it was a good buy, so I started buying, and I'm glad I did so. I'm up on the stock. It pulled back today, so I bought more, and I will gladly buy more. Now I have Amazon, Alibaba, Mercado Libre. I think those three stocks serve different markets. Amazon being a really dominant company, and it has a diversified business with its cloud business, as well as they also do media, right? They're video streaming. So Amazon is just amazing. Great. Alibaba, it's a little bit of a carbon copy of Amazon, but in China and Asia. And Mercado Libre, I think, is more of a pure play e-commerce company that does a great job down in Latin America. So I'm happy to own all three, because I think the ability to really create an e-commerce company that that fits Latin America with the taste and the way they communicate, the way they want to buy, understanding what products work down in Latin America. I think that's a competitive advantage that Mercado Libre is going to have. So glad to buy more shares today, sold off. And I think they have a nice discount. Analysts think it's discounted by 28%. I agree with them. I think it's a good discount. It's not a crazy discount like, oh, it's discounted by 100%. But this pullback was an opportunity for me. And I could also diversify out of the US. I mean, I don't own a lot of stocks that are out of the US, but this is one of them that is down in Latin America. Really nice business. And it's $91 billion market cap. I could see them continue to go up and continue on their upward, trajectory from this point and just continue up to like 200 billion in market cap. So that's Mercado Libre. Glad that there's volatility so I can get a good price when I buy shares in Mercado Libre. All right. So at that point, I think I've got through the list. We talked about a variety of stocks. The very last one that I'm going to talk about is Microsoft. So I released a video on the channel and I started buying into Microsoft today. And I was surprised to see that this company is so valuable and they haven't really done a whole lot compared to their peers, right? The big market caps, 16%. That's with today's upward move of 1%. So I think this is discounted, not, a whole lot, 12%, but I'm glad to pay the prices I'm seeing for Microsoft and build up a position. This business is so important, valuable, powerful, and they make lots of money. They keep growing their top line revenue. They're so big and they still have great revenue. Look at that top line revenue growth, and they're $254 billion of revenue. That's incredible. And their cloud business is really powerful. They're betting big on the AI business. So there's a lot of things there that I am really liking around Microsoft. And I think the stock price has been quite rational, quite reasonable. It wasn't the same case like probably 2023. I thought the Microsoft stock price had gone up a little too fast. I think they were riding the story behind ChatGPT. You see here, like in 2023, they really boomed up 66%. So the market cap really jumped. But over the past year, not so much. They're up a good amount. It's not negative. You can see this volatility. The stock market doesn't know what quite to do with this stock. But I think it's a terrific business. And I will gladly buy shares at 427, 440, even 390. If Michael Anthony is correct in his comment, I'll probably load up. I would load up on Microsoft at 390. For now, I will dollar cost average at 427, 430, 440. I want to own Microsoft. It's one of the most important businesses in our economy and one of the most important stocks in the stock market. All right, cool. And Microsoft is going to spend $80 billion in CapEx, which is amazing. And they have the cash, man. Those guys, they make almost not quite 80 billion. They probably will this year. They do like $80 billion of free cash. So if they want to spend 80 billion on market cap, they can afford it, which is amazing. It's like, boom, they don't have to take one loan. Boom. We have the cash flow. We want to build the biggest AI business there is around, and they can do it. So again, please consider being a member of our community. It'd be awesome to talk to you on weekends and interact with you on Discord, as well as email or on comments on videos. You can get the stocks that you're interested in so I can put them into the list of stocks I'll cover on live streams. So please consider it. And thanks for your attention on that. Everybody, have a great night. Enjoy the win, especially Carlos. Try not to celebrate too much, man. And go find the next one that's going to go up 250%. That'll be your homework. take a day off, enjoy it, but then after that, go find the next one that's going to be a huge winner. And again, congratulations. What a cool situation. All right, everybody. Thanks for tuning in. You guys take care, and I'll see you on the next live stream.